The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Newsfeed Business. Asian stock markets slumped on Monday, and U.S. equity futures pointed sharply lower after U.S. President Donald Trump levied tariffs on Canada, Mexico, and China and triggered fears of a broad trade war and hit to global growth. Japan's Nikkei shares average tumbled as much as 2.3% in the first minutes of trading, and Australia's benchmark, which often functions as a proxy for Chinese markets, also slumped more than 2%. South Korean Kospi dove 2.3%. Taiwan's Topics lost 1.72%. TSMC shares fell 6.17% at the open, while shares of Hon Hai Precision Industry also lost over 7%. Hong Kong's benchmark Hang Seng opened down 2%, while Chinese markets remain closed for the Lunar New Year holiday. S&P 500 futures slid 1.7% after a 0.5% retreat for the cash index on Friday, when the White House reiterated Trump's plan to announce tariffs on Saturday. NASDAQ futures slumped 2.5%, following Friday's 0.3% loss for the cash index. The U.S. dollar shot to a record high against the Chinese yuan in offshore trading and jumped to the highest since 2003 against Canada's currency and the strongest since 2022 versus Mexico's peso. The U.S. currency climbed 2.3%, crossing the 21 peso line for the first time since July 2022. The euro plunged as much as 2.3% to $1.0125, the lowest level since November 2022, with Europe also potentially in Trump's tariff crosshairs. Japan's yen was more resilient, trading flat at 155.25 per dollar. The Aussie dollar took a beating. Cryptocurrency prices slid as the specter of a global trade war put investors on edge and pushed them out of risky assets. Bitcoin fell back to a 3-week low below $97,000 per coin. Ethereum lost more than 14%. Trump slapped Canada and Mexico with duties of 25% and China with a 10% levy at the weekend, as he threatened last month, calling the measures necessary to combat illegal immigration and the drug trade.
Well, Canada's been very abusive of the United States for many years. They don't allow our banks. And you know that? Canada does not allow banks to go in. If you think about it, that's pretty amazing. If we have a U.S. bank, they don't allow them to go in. Canada's been very tough on oil, on energy. They don't allow our farm products in, essentially. They don't allow a lot of things in, and we allow everything to come in. It's been a one-way street. We subsidize Canada by the tune of about $200 billion a year. Mexico, we've had very good talks with them, and this is retaliatory. This is retaliatory to a certain extent. Millions of people flowed into our country through Mexico and Canada, and we're not going to allow that. I'm speaking with Prime Minister Trudeau tomorrow morning, and I'm also speaking with Mexico tomorrow morning. And I don't expect anything very dramatic. We put tariffs on. They owe us a lot of money, and I'm sure they're going to pay.
Canada and Mexico vowed retaliatory measures, and China said it would challenge Trump's levies at the World Trade Organization. A model gauging the economic impact of Trump's tariff plan from EY chief economist Greg Dacko suggests it would reduce U.S. growth by 1.5 percentage points this year, throw Canada and Mexico into recession, and usher in stagflation. Meanwhile, Trump also warned tariffs will also be slapped against the European Union soon.
Well, we're going to see what happens. It'll happen, but we'll see how things work out. It might happen with them, but it will definitely happen with the European Union. I can tell you that, because they've really taken advantage of us. And You know, we have over a $300 billion deficit. They don't take our cars, they don't take our farm products, they take almost nothing. And we take everything from them, millions of cars, tremendous amounts of food and farm products. So the UK is way out of line, and we'll see the UK, but European Union is really out of line. UK is out of line, but I'm sure that one, I think that one can be worked out. But the European Union it's an atrocity, what they've done.
Canada will retaliate against President Donald Trump's new tariffs with 25% levies on U.S. imports. Canadian Prime Minister Justin Trudeau warned Americans that Trump's actions would have real consequences for them. Trudeau said he was slapping tariffs on $107 billion worth of American goods to take effect on Tuesday. The move could trigger a trade war that economists say could slow global growth and reignite inflation.
Like the American tariffs, our response will also be far-reaching and include everyday items such as American beer, wine, and bourbon, fruits and fruit juices, including orange juice, along with vegetables, perfume, clothing, and shoes. It'll include major consumer products like household appliances, furniture, and sports equipment, and materials like lumber and plastics, along with much, much more.
Trudeau and Mexican President Claudia Sheinbaum talked over the phone on Sunday, discussing the U.S. tariffs on imports from Canada and Mexico. The two leaders agreed to work together on shared concerns and strengthen bilateral ties. Mexican President Claudia Sheinbaum said U.S. citizens will be greatly affected by the 25% tariffs imposed on Mexico by Trump's administration. The Mexican leader ordered retaliatory tariffs in response to the U.S. decision to slap 25% tariffs on all goods coming from Mexico as a trade war broke out between the two neighbors. In the video posted on X, Sheinbaum said her government has sought dialogue rather than confrontation with its top trade partner, but an announcement on so-called Plan B in response will be made on Monday. In her post, Sheinbaum also rejected a slander, the White House's allegation that drug cartels have an alliance with the Mexican government, a point Trump's administration used to justify the tariffs.
This measure of 25% tariffs has effects for both countries, but it has very serious effects for the economy of the United States, as it is going to greatly increase the costs of all products that are exported from Mexico to the United States. It's going to have 25% more cost. First of all, we categorically reject the slander made by the White House, the government of Mexico, of having alliances with criminal organizations, as well as any interventionist intention on our territory. Sovereignty is not negotiable. Our government has seized more than 40 tons of drugs in 4 months, including 20 million doses of fentanyl. It has also arrested more than 10,000 people linked to these groups. We have a strategy. We address the causes and we fight impunity. Every day we work for the security of the country. I also say that if they want to act, they should not set their sights on Mexico, but on their own country, where they have done nothing to stop the illegal sale of this and other drugs.
Chinese President Xi Jinping took a breath before his nation announced any concrete retaliation. China's foreign ministry had said Sunday fentanyl is America's problem, adding that Beijing has carried out extensive anti-narcotics cooperation with the U.S. with substantial results. In Europe, German Chancellor Olaf Scholz said it was important not to divide the world with new trade barriers. British Prime Minister Keir Starmer hosted him in Chequers, where they answered questions about UK trade with the EU. Scholz says he wanted to see continued economic relations with the perspective of cooperation and collaboration. That's as Trump said EU tariffs are coming soon, and German automakers, of which Volkswagen would be most affected, said the tariffs could cause inflation for consumers.
Globalization, the worldwide exchange of goods and commodities, has proven to be a great success story that has created prosperity for us all. In the UK and Germany, in the USA, but also in many other parts of the world. That's why it's important that we don't divide up the world now with a lot of customs barriers, but that we also make this exchange of goods and services possible for the future. It is very important that we work closely together between the UK and the EU when it comes to how we develop the wider relationship with the US.
Meanwhile, oil prices jumped on Monday after U.S. President Trump imposed tariffs on 3 countries, raising fears of crude supply disruption from 2 of the biggest suppliers to the U.S. But the prospect of lower fuel demand capped gains. Dubai crude gained marginally so far, but U.S. West Texas Intermediate crude futures were about 2% after hitting more than a week's high at $75.18 a barrel earlier in the session. Brent crude futures rose 0.8% to around $76 a barrel after touching a high of $77.34. Canada and Mexico are the top sources of U.S. crude imports, together accounting for about a quarter of the oil U.S. refiners process into fuels such as gasoline and heating oil. That's according to the U.S. Department of Energy. However, oil prices may fall beyond the next quarter as tariffs cause the demand outlook to deteriorate further, and as OPEC Plus has come under more pressure from Trump to unwind production cuts. The Organization of Petroleum Exporting Countries and their allies, a group known as OPEC Plus, is unlikely to alter existing plans to raise output gradually when it meets today, Monday. Delegates from the producer group told Reuters that's despite pressure from Trump. An analyst says U.S. tariffs may lead to trade wars and rising costs across the globe. A business and finance professor says Trump's tariffs against Canada, Mexico, and China will potentially disrupt more than $2.1 trillion worth of annual trade. However, he pointed out that the U.S. tariffs on Chinese imports may have an unexpected silver lining for China's domestic manufacturers. He also says countries affected by the tariffs could band together and put the U.S. at a disadvantage.
China basically, the trade war may actually, in some sense, may be good because, China is currently under deflation pressure. So this making the imported goods more expensive may actually, in some sense, may actually benefit the domestic manufacturers in China. So in a sense, it may actually help counter the deflationary pressure. So it may not be a very big kind of a blow to China, I would say, especially in the short term. But in the long run, if the conflict escalates, of course, the Chinese economy is going to suffer as well. I would expect China to retaliate against the U.S. by imposing also kind of a 10% tariff on on U.S. imports. And China has another lever. China may actually restrict export of rare earth metals to the U.S., which because this is heavily used by technology companies and defense industries in the U.S. So this restriction of rare earth metals would be another lever that China could use.
The trade tensions and retaliatory tariffs have marked a significant shift in the global economic landscape. The Sydney-based analyst stressed that the world economy, once hailed for its interconnectedness and global supply chains, has now become increasingly fragmented. He fears if a trade war escalates, the situation will deteriorate and impact American consumers up front.
The average U.S. household is going to see their annual expense increase by about $2,600 US. $2,600 is quite a large amount, I would say, for an average U.S. household with $30,000 to $50,000 of annual income. So this expense is going to be quite significant. And I would say this will also add to the inflation pressure in the U.S. So for U.S., I think that's the reason why Trudeau says that the U.S. consumer is going to suffer. I would say the world entering into a period of high uncertainty. We don't know what's going to happen, and the economic uncertainty is going to be high. Stock market volatility is going to be high. And with this trade war, it will come with inflation pressures on all countries. Previously, U.S. Through these big alliances would be able to say a lot of things about the world economy. But now, given this national protectionism, given this segmentation, actually China may have more leeways, more strategic pathways to basically establish alliances with EU, with Canada, with Mexico, etc. So I think, it would, things may play in a way that the world may be more segmented. There are more powers emerge.
An economics professor in London expects a lose-lose trade war. He sees the risk of the global trade war could hurt U.S. corporate profits and pressure inflation, potentially upending U.S. interest rate cut expectations and further weaken currencies such as the Canadian dollar and China's yuan. With Trump threatening to broaden tariffs to Europe, the analyst says unless the world leaders settle it, the world may have to get used to higher prices.
I think there are kind of two major possibilities. One is what happened with the US-China trade war during Trump's first term as president, which is both the US and China increased tariffs, and then those tariffs have stayed there and they are now kind of a permanent feature of the trade landscape. So one possibility is that the higher tariffs are here to stay. The more hopeful possibility will be that governments realize the costs that these tariffs may impose and try to reach a negotiated solution to remove the tariffs. So I think the Canadian and Mexican governments will be trying to talk with their US counterparts and work out what kind of a deal could we reach that would allow both sides to remove the tariffs.
In other news, Panama promised free passage for U.S. warships through the Panama Canal and said it will withdraw from China's signature lending program after the Secretary of State Marco Rubio blasted Panamanian government during his visit on Sunday. In a report on Bloomberg, Rubio echoed President Trump's complaints about Chinese influence over the waterway, warning that the U.S. would take measures necessary to protect its rights unless Panama makes immediate changes. The Panamanian leader played down the tensions but reiterated his country will not give up the canal as his government offered other concessions to the U.S. Business and economy news from around the country in a moment. Newsfeed Business will be back. Stay with us on BNC.
The latest news, national issues. Are you concerned of the one-year ban rule with impeachment, the political scene?
You know what? Kaya po kami talaga naging magkaibigan ni Pangulong Duterte. And I hope it's because of a kinship and the commonality of beliefs.
And conversations with prominent personalities.
I always question what's out there na babrand na natin na fake or conspiracy. Parang meron naman talagang katotohanan.
All these firsthand at the forefront.
Welcome back to Newsfeed Business. Group Philippine Egg Board Association, or PEBA, assures the public there's no egg shortage for the year. This comes after Agriculture Secretary Francisco Tiu Laurel Jr. forecast a shortage of eggs by April after farm gate prices inched down to 4 pesos per piece due to overproduction in 2024. That prompted producers to slaughter their chickens to offset losses. PEBA President Francis Uyahara tells Bilyonaryo News Channel's Business 360 producers started to repopulate their flocks in preparation for December last year, prompting egg prices to go down by more than 1 peso.
Last December, as you can remember, the price already stabilized. It went up, but not too high. We were able to stabilize the prices of eggs during December. And right after New Year, prices started to go down already until now. So it's a sign of that the supply of eggs are stable right now and enough for the current demand.
Uyahara also says egg supply may be affected by the potential local outbreak of avian influenza. He urges government to speed up the release of licenses to make vaccines available to address bird flu.
Well, right now, we do not have the necessary measures to address AI locally because the commercial vaccine is not yet approved and it's not yet finished with the licensing with due to the delayed process in our government, specifically BAI and FDA.
The World Bank warns the Philippines risks falling behind in economic competitiveness and lose vital investments if it does not shape up in three crucial areas. Let's get details from our correspondent Sujin Kim on the phone. Sujin, go ahead.
Yes, Raine, the World Bank is calling for urgent action to cut red tape, modernize digital infrastructure, and streamline regulations to boost economic competitiveness, warning that without swift reforms, the Philippines risks falling behind in economic competitiveness and losing vital investments. The latest Business Ready or Be Ready report reveals that the Philippines is struggling with crippling inefficiencies in company registration, property transfer, and insolvency processes, placing it behind its ASEAN neighbors. According to the World Bank, the Philippines needs a 5% GDP per capita growth rate to transition into an advanced economy. However, in the last decade, the country has only achieved 3.4%, well below the target. Despite the private sector contributing 90% of jobs, 70% of output, 75% of investment, and 80% of government revenue, regulatory barriers continue to slow down economic growth. The World Bank warns that unless regulatory processes are reformed and business transactions are modernized, the Philippines will continue to struggle with attracting investments and competing with ASEAN countries. The Anti-Red Tape Authority says the government is taking steps to address the issue raised by the World Bank, with a focus on streamlining regulations and eliminating unnecessary bureaucracy. ARDA is also calling on the private sector to report bottlenecks in business transactions to help validate and drive reforms. Without decisive action, the country risks stagnating in economic growth, losing job opportunities, and falling further behind its regional counterparts. And those are latest updates from here in Quezon City. Back to you, Raine.
Thank you so much for that report. Sujin Kim. The Philippine Stock Exchange Index has officially entered bear market territory Friday, plunging to a two-year low amid global market turmoil triggered by the U.S. tariffs. With blue chip stocks shedding 340 billion pesos in market cap and the peso sliding alongside other major currencies, investors are scrambling for direction. How deep could this downturn go, and where are the opportunities? To break it down for us, we have Chupitero.com founder Miko Sayo. Grateful you could join us, Miko, and welcome to Newsfeed Business.
Hi, Raine. Thanks for inviting me again here.
We appreciate you making time for us. Now, the PSEI in bear market territory, down over 20% from its peak. Blue chip stocks losing 340 billion pesos in cap. Given the brutal sell-off, do you see any near-term bottom, or is there more pain ahead?
Well, actually, what we did last Friday already looked like a bottom, no? In normal times, in normal instances, given how extremely oversold the market was already, and given the sort of like capitulation type of behavior we had last Friday, it did look like we had a short-term bottom at least, you know. But now that we had this issue on a possible tariff war worldwide because of what the U.S. is doing, and it puts an additional issue on the market. So now we're not really sure if that low last Friday will hold.
Which means, is there a precedent in the market similar to the trade war that Trump just launched? Can we look to a certain pattern in the previous term of President Trump, and in which he affected the markets here?
Well, I'd have to look at my historical charts to see that, you know. But what is a bit fearful now for traders is that the U.S. is quite overbought and is quite overvalued. So this trade war issue could be an impetus for traders and investors to, take some money off the table. So although the Philippine market is trading at the lows of its range, any big corrections in the US will likely affect us also.
We also saw the peso weaken alongside Canada's dollar, China's yuan, and Mexico's peso. The US dollar surged. Is there a flight to safety, or are these currencies facing deeper economic threats from the new US tariffs?
Yeah, well, it's not really a flight to safety, but it's more of other currencies are looking cheaper relative to the US dollar. So the US dollar will have to appreciate to offset the impact of the tariffs.
Understood. We also saw Bitcoin plunging below $100,000 as investors also left to see risk assets. Do you see crypto's weakness as a temporary reaction to market uncertainty, or is this the start of a larger collapse?
Well, crypto has been following Wall Street. So whatever Wall Street does, crypto will also follow. So if this is a trigger for a big correction in the US, I would expect crypto to drop back down as well.
Ethereum, 14%. What do you think might have been behind that?
Well, again, everybody's, because of what happened in the weekend, everybody's dumping risk assets, no? So I guess the riskier the asset, they're the first ones to go for in a portfolio of a fund manager.
Understood. Asian markets also sliding, but analysts say bargain hunting could provide a short-term bounce. With this, do you think the PSEI is also primed for a relief rally this week, if not just today? And will foreign outflows continue to weigh it down?
Well, again, in a normal market, we should have rallied already. I was hoping that today could be the day that the market could rally off its lows, but again, because of what happened over the weekend, I'm no longer quite sure whether that bottom at 5,862 would hold. And if it doesn't hold, we could possibly drop to 5,600 or even 5,500 in the short term.
Understood. Some traders say the PSEI slide is a wake-up call on why the local market lacks depth compared to regional peers. With more global volatility ahead, do you think it's time for urgent structural reforms in the Philippine stock market?
Well, definitely. In my opinion, if you ask me, I think the major issue for the market is its reputation, of the perception of people of the PSE being like a all boys club, and that there's a perception that the market is always skewed in favor of the insiders. So if you ask me, in my opinion, I think that's where reforms need to be made. We need to instill more confidence to market participants that it's a fair game and it's a fair market.
Understood. Do you want to weigh in on how much of an impact this alleged egg shortage due to bird flu might impact our agri, retail, and food stocks?
Well, egg is a pretty small component of like the groceries of households. So although it might affect prices of eggs, it should have a pretty small impact on overall inflation.
All right. Finally, Miko, all things considered, what's your call to investors for the short, medium to long term? What might be your call on certain stocks?
Wow. Well, of course, the market is still trending down, although we are quite oversold. It's still trending down. It's even threatening to pierce through that 5,700 major support line. So this market, I believe, is still a sell on strength, and we are probably sideways at best.
Miko Sayo, founder of Chupitero.com, thank you so much for your insights on today's market action. We appreciate it. Thank you.
Thank you, Raine.
As the PSEI struggles to find a floor and the peso weakens, all eyes are on global market volatility and whether bargain hunters can fuel a much-needed relief rally. Philippine shares bouncing back to positive territory in the first trading day of the week. That's amid investors' bargain hunt after stocks fell into bear market territory last Friday. The PSE index is up only 0.3% to close at 58.83, finishing the day as the best performer in Asia. Among sectoral indices, only services ended in the red, with property rising the most at 2%. Decliners still outpaced advancers, 131 to 81. Total value turnover stood at 11.3 billion pesos. Pretty hefty there. More than half of the day's most active stocks ended in the red, with Universal Robina falling the most, nearly 5%. Meanwhile, at the foreign exchange market, the peso is currently trading at 58.66, weaker than Friday's close at 58.36 to the US dollar. That's after President Donald Trump slapped tariffs on Canada, Mexico, and China. That's a wrap of today's Newsfeed Business. Thank you so much for making us your daily source of financial insights. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News channel. Follow the Money is next at 4:30.